Today, we're diving into the latest developments regarding SoFi, breaking down essential data points and providing a comprehensive market update. A lot has happened recently, so let's get right into it. Hello, everyone. Welcome to Daily Stock Update. If you are new to the channel, be sure to subscribe to the channel and turn on post notifications by hitting the bell so you never miss any of our uploads, and also enter our giveaway. But before that, alert, this is not a financial advice video. SoFi stock experienced a downturn of 3.86%, aligning with broader market trends as growth stocks collectively faced a challenging trading session. After market hours, the decline continued slightly, dipping another 0.56%. The stock fluctuated between a low of 16/10 and a high of 16/81, making it a tough trading day overall. Despite this, trading volume remained significant, with 35.04 million shares exchanged compared to the average of 42.9 million. A major influence on today's market movements was the Federal Open Market Committee (FOMC) meeting. Investors reacted strongly to discussions about tariffs, which many analysts believe could impact consumers directly. While Federal Reserve Chair Jerome Powell avoided making explicit statements on tariffs, he did acknowledge potential inflationary risks associated with changes in trade and immigration policies. This added to existing market concerns, reinforcing the fear that inflation could surge in the coming months. One of the first data points that reignited inflation concerns today was the mortgage rate update, which stood at 6.93%. Historically, inflationary effects tend to lag by about 6 months, meaning we may witness inflationary pressures building up by the latter part of the second quarter. Although this news was less than ideal, there was a silver lining. Building permits and housing starts surpassed expectations, suggesting resilience in the housing sector despite economic concerns. Interestingly, SoFi's decline was not entirely driven by internal factors, but rather by external influences. A broad sell-off occurred following unexpected news related to Palantir. Reports surfaced indicating that the Pentagon might reduce funding, which caused a ripple effect in the market. Additionally, Palantir's CEO selling shares created further uncertainty. Many investors admire SoFi's CEO for maintaining his stake in the company and avoiding stock sales, a practice that reassures shareholders to some extent. Regarding short interest, there was an increase of 131,000 shares being shorted, bringing the total shorted free float to 11.74%, equating to 126.43 million shares. While shorts have been active, their strategy remains relatively conservative without any extreme movements. It'll be interesting to see how this plays out in the coming weeks. No significant corporate announcements, regulatory filings, or SEC updates emerged from SoFi today. However, Form 144 filings submitted yesterday were strictly for tax purposes, and no insiders at SoFi have been offloading shares. This lack of insider selling is generally seen as a positive indicator, showing confidence in the company's long-term prospects. Looking at options trading activity, 15 million call options and 3.55 million put options were recorded. Notably, 44% of options transactions leaned bearish. Among call options, the majority of traders were betting on a price range around $18, whereas bearish sentiment indicated expectations for a drop below $15. It's worth noting that earlier expectations had been set higher, around the $18.50–$19 range, but market sentiment has recently shifted slightly downward. When examining large-scale transactions exceeding $100,000, a pattern of consistent selling emerged. The most notable transactions included sales of 10.1 million and 5.5 million shares, both executed after market hours. Some market observers speculate that these sales may be indirectly tied to Palantir-related developments, potentially impacting a range of tech and AI-focused stocks. A major focal point in today's market activity was dark pool transactions, which remained highly active. These trades often involve institutional investors and hedge funds, making it challenging to discern specific buyer and seller intentions. Unfortunately, dark pool data does not provide bid-ask transparency, necessitating a review of prior and subsequent transactions to gauge overall sentiment. At the current price of $16.18, SoFi is positioned between key technical levels, the pivot point, and the first resistance level, R1. The next major support lies at $15.93, a level to watch if market fears persist into the next trading session. On the upside, resistance sits at $17.77, but given the prevailing caution in the market, this level may not be tested in the immediate future. No new analyst ratings have surfaced recently. The last update came about 5 days ago from analysts at BTIG, but there has been no significant shift in sentiment since then. One notable absence is a fresh perspective from analyst David, who previously set a bearish target of $5. It remains to be seen whether he will update his stance or hold firm on his previous outlook. Examining SoFi's technical indicators, today's price action managed to hold above a key moving average level, the ALMA, which currently stands at $15.88. Another crucial support level at $15.73 corresponds to the 50-day moving average, a historically significant threshold for SoFi. The stock's ability to stay above this range last week demonstrated underlying strength, but broader market concerns may still weigh on future performance. A recurring theme driving market sentiment is inflation. Many investors remain uneasy about rising prices and the Federal Reserve's response. Recent discussions have highlighted how tariffs could indirectly fuel inflationary pressures, exacerbating existing economic uncertainties. What's your take on SoFi's current situation? Have you been taking advantage of price dips to accumulate more shares, or are you staying on the sidelines? Personally, I haven't made any significant moves lately. However, I recently reallocated around $60,000 to $70,000 to a new portfolio with a notable $30,000 investment in Celsius following their earnings announcement. Looking ahead, if SoFi retraces to the low $15, high $14 range, I'll consider increasing my position. At that point, I'll provide updates on my trades, including weekly options activity. It's been a while since I actively traded SoFi options, but in the past I've used put-selling strategies when prices dipped. Recently, my puts expired worthless, effectively allowing me to collect premium income with no downside risk. Friends, that's all we have for you today. What is your opinion about today's video? Get involved and let us know in the comments down below. Thanks for watching.